So you're thinking about buying a property and you have decided that you need X amount of bedrooms and you need a backyard, and we want to talk about what your lifestyle is and where you would like to buy that home. But none of those things can really happen until you get qualified for a loan. So it's really important to have a lender that's working with you. And that's why I've invited Leslie Day here. Thank you for being with us, Leslie.
Thank you for inviting me. It's nice to talk
Absolutely.
with you.
So tell us what it means to get qualified for a loan and what the process is, and how do you make it as easy for someone so they can go out and buy a property?
The first thing to get qualified is just a conversation. Really easy. This can be a phone conversation to start with. Just depends where you are in the process or how what you're comfortable with the pre-qualification. We can start with just a phone call as long as you have a pay stub in front of you and a W-2.
So let's say I'm a buyer and you've got my pay stub and my W-2. What kind of questions are you going to ask me, and what should I expect when I call you?
Really simple questions. All I'm looking for is to see what your income is per year and then per month. And we'll talk a little bit about maybe some monthly debts that you have. And that's pretty much it. Income, debt, and savings will get you qualified.
So when buyers call you, you can get them qualified, and then it gives them a price range that they can go look for a property. Is that correct?
Well, with a phone call, without looking at the documentation, we call that more of a pre-qualification.
Okay.
And sure, we can talk numbers. We could talk purchase price, monthly payment. But to really get pre-qualified, you need to get in your documentation and fill out an application. Really easy to do an application from your phone online.
Oh, okay.
Super easy.
Okay.
You can also scan your documents with your phone and upload them securely directly to the application.
That's important.
Super easy. And I can walk you through it if it becomes complicated.
Are there other documents that are required besides the W-2 and the, what else did you tell me?
Pay stubs.
Pay stubs.
So when we talk on the phone, I'll ask you to look at your gross income year to date.
Okay.
And then you'll give me your gross W-2 income from, let's say, last year, 2022, if we're doing it tomorrow.
Okay.
And then with those numbers, we can figure out how much you make per month. And then we'll talk a little bit about maybe you have a car payment, maybe you have a minimum payment on a credit card. We'll look at the debt, and then we'll come up with what you can afford per month.
What the price range is for a property.
Yes.
Okay, now, one of the things as a realtor that I like to talk to my clients about is how to work backwards, so that they look at the payment at the end of the day, what it is for their payment, their taxes, their insurance, all those things combined, and then to find a comfort zone. Because how I phrase it is, I don't want them to be on a top ramen budget, where that they're so house poor because they're putting so much into the house that they can't have a lifestyle. I want people to still be able to go to dinner occasionally, or whatever it is that's important to them. Do you work that same way?
I do. What's interesting about that question that you just said is I always ask, what are you comfortable paying per month? And when I do the calculations and I look back at that number that they've given me, it's usually within $500.
Oh.
Like, people really do know what they can afford. They've thought about a house. They're just looking to see if what they make and their current monthly debt, if they will get qualified for the loan.
Okay.
So they have a great idea, just to see what they can afford.
Okay. So keeping that in mind, when I've worked with Leslie and we've worked with clients together, we have a collaborative effort. I refer some clients to Leslie. She pre-qualifies them, and then she can give us a range, the price range, and then we can decide what neighborhoods we can go look in, what neighborhoods are in that price range. Makes it a very simple strategy. Sometimes it's not as easy because maybe I have clients that are not W-2, or they maybe have creative financing. Can you talk to us about some of the programs that are available?
Oh yes, absolutely. If you are self-employed, a little bit different documentation for that. For that, we're looking at 2 years of federal tax returns, not state, just federal. And the reason we're looking at the tax returns is because all self-employed people have write-offs. And so for self-employed income, we look at net income. And then I add back in a few things to bump that income up. And we look at it for 2 years. and that's how you get your monthly income
Okay.
per month.
Now, what if I am working with a buyer that maybe doesn't have as much cash to put down? What kind of programs do you have available for that kind of buyer? But they have a great income, they
Right.
have little debt.
Right. So if you're talking about a first-time home buyer, there are first-time home buyer programs with as little as 3% down, 3.5% down.
Oh, great.
Depending on FICO score. So a lot goes into the qualification. It's not just one loan, one person. Everyone has a unique income stream sometimes, unique debt,
Yeah.
unique savings, all that happens. You know, we look at all of that and then we pick a loan program based on what the borrower's needs are.
Okay.
So they might say, I want a very low down payment. Then we'll look at the 3 or 3.5%. They might say, I don't want any mortgage insurance. Then we'll look at 20% down, 25% down.
Okay.
Right? They might say, I'm self-employed and I make very little on my taxes. Well, we can look at a different program for them, a 12-month bank statement program or 24 months of bank statements, looking at their income only.
So it sounds like every time you work with a different borrower, it's custom designed for their situation.
Absolutely.
Fantastic.
Yeah.
Okay. Leslie, when I present an offer, as you know, I write up my purchase agreement, but I also need it to go with a letter from the lender. Can you talk to people about what you provide to me so that we can work together on that?
Sure. So once I have an application and I've looked at your documentation, I will give you, Crystal, a pre-qualification letter. What I prefer to do, though, is give you the pre-approval letter. So a pre-approval letter is a little bit different. I have an application, I've looked at all of your documentation, and I've ran it through an automated system, and we get an approval. So I can actually not only give you a letter of approval from me, saying that, of course, I've looked at everything, we've pulled credit, but I can give you an automated approval so that it shows the person's income, it shows their down payment, it shows the monthly payment, interest rate, and that they're qualified based on everything that I've looked at.
Gotcha.
I can even do one step further
Go, Leslie.
and get an underwritten approval.
Oh.
So I think with your offer, if there are several people putting an offer in on that house,
Right.
but you submit an offer that has an underwritten approval, I think that would put that offer maybe ahead of the others.
It absolutely does. It makes our offer so much stronger. So one of the things that I do when I'm working with the listing agent, the seller's agent, is I reach out to them and say, I want you to be real aware that I'm working with a qualified lender and we've already gone through the process. One of the things I really like about working with Leslie is that I call it putting the cart before the horse. She's gone the extra steps to make sure that someone is qualified so that our offer does stand out. And when you are a listing agent, that makes a huge difference because the goal is to get to the close of escrow. And if you're working with someone that maybe hasn't gone through this process, or they don't have a letter from a lender yet, that offer maybe does not have as much validity or strength behind it. So kudos to you. Thank you,
So
Leslie.
that approval from the underwriter says that she's already looked at your income. She sees, or he sees what I see, and that they are approved. All they need is that property.
Fantastic. So that's my job, is to go help find the property. So that's where we have to lay out what your most important criteria is. Do you have a dog? That you need a backyard? Do you really need a fireplace? Is it about the school district? All of those things come into play. But you can't buy a house if you don't have a loan unless you're coming in cash. And so it's really important to make sure that you are qualified to have the money behind you to go out and look for the right house that's going to be your next home. Okay, so Leslie, it's a new year, and I know there's a lot of people that are on the fence. They're thinking about buying a property. What do you think, in your experience, what have you seen that has kept people from reaching out or making the call?
That's a great question. I think it's fear. People have a fear that, oh, I don't make enough money, or my FICO score is not high enough, or wow, I had that late payment a year ago. I have a 30-day late on my credit, or I have a collection, like from T-Mobile or something, I don't know. Something like that that's on their credit that they just think that they won't qualify. I'm going to tell you, that's not true. you will qualify. You just have to take that step to make the phone call, to just talk about it, right? Just
Right.
if 10 minutes, set aside 10 minutes or 20 minutes just to talk with me about a home purchase and what it takes and what we can do.
And let's say their debt ratio is too high. Let's say
Okay.
someone's debt ratio is,
Right.
and that's what's keeping them from calling you, is they're thinking, oh my gosh, I've got all this credit card debt, or I have student loans, or how can you help them, guide them through how to reduce their debt ratio so that they can qualify for more?
That's a great question also. This is probably the number one reason that people don't think they can purchase is because of their debt.
We got to get past that fear factor, right?
Yes, for sure.
We
Because
want you to be a homeowner.
yes, because if you don't qualify right now, I can put you on the path to qualify in 6 months or a year or 2 years, whatever your goal is, we can get there. Yeah, for sure.
And honestly, even if you bought in a year, property appreciates. And so over the course of time, it's going to be such a better investment for you to buy something because you've made the phone call than if you continue to be a renter. And that's the goal for both of us, is to get you, this is the American dream. Buy into the American dream and be a part of it. And making the phone call to the lender is one of the first things to make that happen.
I don't think people realize really that that payment that you're making for your home is tax deductible. So the rent that you're paying is not doing you any good. It's not helping you on your property, not helping you on your homeowner's taxes to get any money back. Not helping you on your income taxes is what I meant to say, getting money back. But having a mortgage payment, insurance, property taxes, those things are tax deductible and can help you maybe get some money back at the end of the year.
So say more about that. How is that tax deductible? What does that mean?
Well, I didn't write the laws, but they're on the tax books.
Yeah.
So let's say, for ease, let's say you make $50,000 a year, and your mortgage payment, you can write off all the interest on your mortgage payment.
Okay.
Let's say the interest is $1,000 a month, so that's $12,000. So you would take that $50,000. Now you don't make $50,000. Now you make $38,000, and that's what you're taxed on. You're not taxed on your income of $50,000. So you also take the property taxes, and you, whatever amount that is, and you make your $50,000 or $80,000, you deduct that, and you're only taxed on the amount after these tax deductions.
This is the American way of saying thank you for buying into the dream. And it makes such a difference. And that's why, if you're on the fence and you are renting, take the leap of faith. And if you're in a smaller home and you think, gosh, maybe how am I going to qualify for the bigger home? We've had more babies, we need more space, whatever the case may be. This is a good place to start to say, okay, how are we going to take your equity from your current house and marry it with how you're pre-qualified with a new loan now and get you into your dream home? We'd love to help make that happen. So historically, people, I think, have always thought you have to come in with 20% down. But I think this holds them back from actually buying. Can you tell us about other options or programs that might be available if they don't have 20% cash, especially with the prices of homes in California?
Right. So you can have 3% down, or 3.5% down, 5% down. I think what keeps people from making that call to get pre-qualified is they think that they don't have the down payment. They don't have enough of a down payment.
Yeah.
There are lots of sources for your down payment. If you've been putting money into a 401k, you can access that 401k money for your down payment.
Oh.
Yes. And then you pay and then you pay your 401k money back to yourself.
Oh.
Yeah.
What a win-win.
It's your money. You pay it back before income taxes come out of your check, so it's pre-tax dollars, and you're paying yourself back.
Okay.
And now you have that chunk of money for your down payment and closing costs. That's one way. Another way is gift funds. A relative can also gift you money for your down payment and closing costs.
Yeah, I wish I had that uncle. I didn't come with that uncle, but that is an option. That's good to know.
Well,
what are other options?
When you're talking about relatives, though, and let's say you have a 30-something buyer, which is, I think the 30-somethings are a really big segment of first-time home buyers.
I agree.
Parents tend to own their own property. And they can also access the equity in their property
There we go.
to help their children with down payment.
There we go. Mom and dad can help.
You can't take it with you, Crystal.
Right?
Yeah, so that's one
Very well
way.
made.
Right? A home equity line of credit. You can do as small as $50,000 home equity line of credit, and that will help your children purchase their first home and just get them started, right?
And so that can be gifted to the
Yes.
to the child. Okay. Okay.
Yeah.
So many resources. Don't limit yourself. Get past the fear factor. Give us a call.
Yeah. I look forward to hearing from you.
So we hope we've taught you a little bit about how to get qualified for a loan. Feel a little bit more comfortable with it. You're going to make the call to one of us. Let's make this happen for you. This is the year.
Set aside 10 minutes or 20 minutes to talk with me.
Thank you for your time. I greatly appreciate it. We appreciate you being part of our channel. Please subscribe and click on the notifications, and we hope to hear from you. Have a
Thank
great
you.
day.